All right, so Canada and the US are in a trade war at the moment. This is really interesting, very, very interesting for the Canadian economy, particularly because of the mess that has still not yet been cleaned up from the interest rate hikes that began, I believe, in 2022, 2023. And so the Canadian economy is still picking up the pieces and licking its wounds from the massive effects that the quick rise in interest rates has had on the economy. Many people have been priced out of the housing market. A lot of borrowers right now are headed toward renewal of their mortgages and renewing from the low 1%, 2% to now having to renew at about maybe high 3% or 4%. So this makes for a very interesting landscape for the real estate market, and not to mention also for the economy at large as well. So these tariffs, how are they impacting the Canadian economy, and what are the potential impacts on the Canadian economy? Well, tariffs simply are a tax. You can think of it as a tax. And so basically, the US is going to increase its tax or its tariff on Canadian imports to the US by 25%. Now, this is going to affect the US economy because it's going to increase the prices of Canadian products coming into the country. And of course, as usual, corporations are not going to absorb those costs because, let's just face it, that's not good business. However, this is going to have a huge effect on prices for the American people. And so we're going to see a lot of price fluctuation over the next months and even probably next few years as well, as these tariffs are implemented. And of course, Canada, in retaliation, has announced just yesterday, I believe, that they are going to be implementing tariffs, higher tariffs on the US imports as well. And the same exact effect is going to happen to the Canadian economy, where we're going to have to be paying a lot more for our American products. Now, how is this going to affect the economy at large? Now, how I like to think about it is, in the best case scenario, the Bank of Canada is going to be not reactionary and proactive in this regard. Of course, once tariffs are finalized and things are, set in stone and signatures have been printed, they're going to be proactive and continue to reduce the interest rate so that the inflation that's not simply caused by interest rates will definitely be able to alleviate some of the inflationary pressure from the increased tariffs that we will have to incur because of the Canadian tariffs on imports from the US. Reducing the interest rates would greatly help the economy, I think, in this regard. And this would, of course, help the variable interest rates, variable mortgage interest rates. And so those famous variable rates that have historically always been lower than fixed rates, we would begin to see that these rates would dramatically be lower than fixed rates. However, I actually recently saw an article from the Bank of Canada stating that the ramifications of the tariffs are that the government bond yields are now reducing as well, and the government bond yields are directly tied to our fixed mortgage rates. And so this should present an interesting case, because if both the fixed mortgage rates are reducing and the variable rates are reducing, this now creates a real estate mortgage interest rate climate that is very, very favorable for borrowers. And so we can potentially see an uptick over the next months into the summer and even into the coming years in the real estate market of home prices once again. Historically right now, not historically, but right now, what we're seeing in the Ottawa, Ontario market, I was very shocked to see this, but I'm seeing, new construction projects of condo townhouses in the Barhaven area, which is known as one of the more expensive, statistically, one of the more expensive areas in the Ottawa region. These are now starting at $370,000, where just last year you'd probably be able to get into one of these for closer to the $500,000 range, or even maybe the $450,000 range. So things seem to be changing very, very quickly. There's a lot of fluctuation in the real estate market, in the mortgage interest rate market, and of course in the economy. So this presents a very, very interesting scenario. Now, my advice to you as a mortgage agent would definitely be to kind of sit on the sidelines and wait a little bit, unless you have a very definitive plan. My advice to all clients that I speak with is to approach every scenario with a plan. Because if you don't go in with a plan and you blindly go in and buy real estate now, not considering your financial circumstance over the next 6 months to a couple years, if you're family planning and you know that you're going to need to purchase something or upsize or anything like that, it's really important to consider these things. If you're now planning on paying off certain debts, like, you have to consider the entire financial picture and how your financial picture fits into the greater economic picture of this country and what's happening. So I would love to sit down with you. If you have any questions, if you have any concerns, I would love to be able to speak with you and give you the best of my knowledge. And so I look forward to connecting with you. If you enjoy this video, make sure to hit the like button, make sure to subscribe, and I'll definitely be releasing some more content like this to be able to give you some updates on the Canadian economy, on the real estate market, and how you fit into all of this. All right, cheers and take care.